Council Member Chintan Patel sir, Managing Committee colleague Abhinav Malavia, newly elected Sahil Shah, and Secretary C Association Ashish Sharma ji, a distinguished guest. A very warm welcome to all of you on the topic of overview of new income tax bill 2025. I'd like to request Chairman Ahmedabad branch Sunil Sanghvi sir and the President C Association Rikin Bhai to please escort dignitaries Saurabh Soparkar sir to the dais. I request member to please join us in welcoming sir with a big round of applause. We are very much thankful to the sir for accepting our invitation and taking the session on the income tax overview of Bill 2025 in a very short span of time. The analysis of this income tax bill is incomplete without listening from the authority himself, Saurabh Soparkar sir. I request members to please rise for the ICI motto.
सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Now I'd like to request Chairman Ahmedabad branch C.S. Sunil Sanghvi sir for his opening address to this August gathering.
Respected today's faculty, Senior Advocate Saurabh Soparkar sir, President of the CA Association, CA Rikin Patel, Vice Chairman of the Ahmedabad branch, CA Neerav Agrawal, Honorary Secretary of the CA Association, C. Ashish Sharma, of the dais, Regional Council Member, CA Chintan B. Patel, CA Vikas B. Jain, Managing Committee Member, CA Rinkesh Shah, CA Abhinav Malavia, newly elected MCM, CA Sahil Gala, seniors and friends. I welcome all of you to this seminar or the discussion on the overview of the new income tax bill 2025, jointly organized with the CA Association. Originally, the event was planned for the finance budget on the 4th Feb 2025, but as there were not much changes, little changes were there, and we have decided to, and it was also announced by that time the finance minister that new income tax bill will be presented within a week. So we have decided to have the session for the new income tax bill. When it was launched, within 1 hour, it was full, and so many messages from the members were there for that, and henceforth we have telecasting this seminar on the YouTube Live and the Facebook Live also. I'm thankful to Senior Advocate Saurabh Soparkar sir for accepting our invitation, and within 3 days, we are on the discussion for the new income tax bill 2025. Thank you very much, sir, for accepting. Let's have a big round of applause for the sir. As for the CP also, you are aware for the last calendar year, the date was extended. Now it is up to the 28th Feb 2025. We are planning the CP seminar also on, obviously for this there is no CP, but we are planning for the CP seminar also for the in the next week, maybe on the Friday or Saturday. You will get the mail on Monday for that. Thank you.
Thank you so much, sir, for setting up the perfect tone for the session. And now I request Presidency Association Rikin B. Patel for sharing his address and thoughts with the members of Ahmedabad branch. Thank you.
Respected Senior Advocate Sri Saurabh Soparkar sir, Branch Chairman Sunil Sagvi sir, Neerav Agarwal Vice Chairman, Secretary Ashish, dignitaries of the dais. I won't take much of the time, but I will take this opportunity to just give an update. Today we had a cricket match of our association team with Baroda branch, and our team did well. We won the match. We have also made arrangement for this book on finance bill published by Taxment at a very concessional rate for members and chartered accountants at large. Those who have registered online can collect from the downstairs, and those who have not registered can collect it by paying cash at the counter. I would also like to congratulate Sunil Bhai for his successful tenure, and under his leadership, the branch secured second rank at ICI at the Best Branch Award. With this, I will not take much of the time and will hand over the charge for further proceedings.
Thank you so much, President sir, for your warm address. On behalf of Ahmedabad branch, I would like to congratulate Team C Association for their historic and landside victory in the cricket match today against Baroda branch. I request members to please give a big round of applause for Team Chartered Accountant Association. We are proud to have Abhinav Malavia, our managing committee member, who also represented C Association team. Thank you, Abhinav, for your historic performance in that same tournament. Now I'll request dignitaries on the dais, Chairman Ahmedabad branch and the President C Association, to please felicitate Saurabh Soparkar sir with a small token of appreciation on behalf of both Ahmedabad branch and C Association. That was on behalf of Chartered Accountant Association. Now I'll request a small token of appreciation on behalf of Ahmedabad branch. I'll request Chairman sir and again association team to please join in felicitating Soparkar sir. Yes, we are intensely skipping the part of formal introduction as such, because it would be very unfair to deliver a introductory speech to this audience. I'll request sir to please take the charge. Thank you, sir.
Mr. Chairman, Mr. Vice Chairman of the branch, Mr. President and Secretary of the Association, let me begin by congratulating the President, the Chairman of the branch for his successful completion of the tenure, and my best wishes to the incoming Chairman, so also President, for ensuring that we have a win in the cricket match. With this, let me get on to the topic in hand. I had assured that I would come and deliver, like so many years, a speech on the finance bill, which was obviously on the Parliament on 1st February, but then all of us know that it hardly contained any amendments to be discussed. So instead of continuing with the talk, I decided let me not have that talk. I assured that I would, because the Honorable Finance Minister had said that she is coming up with a new bill very soon next week, I assured that I would come and discuss the new bill. And here I am. I did not know when I assured what kind of trouble I'm going to get into. It's a bill of 662 pages. It was in the public domain 3 days back. For a day I was out of Ahmedabad. I tried to go through it yesterday. But then, after I went through it hurriedly, I got the feel of it. If I am to ask, how do you describe this bill in one word? I would say disappointing. And if I were to say, no, use 2 words, I would say thoroughly disappointing. Why do I say this? A bill of this magnitude, direct tax code which governs the country, finances of the country for decades to come. 1961 Act lived for more than 70 years. Earlier Act, 22 Act, lived for almost 50 years. It should be a vision document. It should be a document which must look at future. It must envisage challenges of the times to come and address those challenges. It must be a vehicle to boost the economy. It must contain the game plan to ensure that the concerns of the SSCs are answered and taken care of, and that new establishment is being set up, which would be both satisfying the SSCs and at the same time would not result into loss of revenue for the state. Instead, what I find is that this bill, and it is explained in other documents by the ministry itself, has no policy change. So what is the meaning of the term policy change? There is no change from the existing act. If there is not going to be a change from the existing act, why do you want everyone to toil over the new set of provisions for administering something which is being administered for more than 70 years? You change the whole structure so that everybody will have to now spend hours and hours, days and days to understand it, to understand what the old law said, because you are accepting there is no change. What is the change? It is said that this law is simplistic. How? The long sentences used in legal language are replaced by simplistic English language. Partly true, I am not saying no to it. But look at the mindset, and that is where I really feel a little upset. I am sure smart people must have gathered for the purpose of drafting the bill. Mr. A would have said, oh, explanations are something which is not good. So omit explanations. Old law had 900 explanations. You need explanation in an act of like this. What is the meaning of the term agricultural land? What is the meaning of the term, let's say, jewelry? What is the meaning of the term due date? You will require explanations at every stage. So one gentleman would have said, no, explanation is not good. Take out all explanations. Under the new bill, there is not one explanation. So where have the provisions gone? Instead of explanation, you have one more subsection. So let's say old section had 2 subsections and 2 explanation. New section has 4 subsections, 2 old subsections and 2 new subsections in place of explanations. What is it that you are gaining? Nothing. But what is it that you need to do? You need to again apply your mind to find out what is there and what is not there. So first gentleman would have said, we don't want explanation. The second gentleman would have said, we also don't need provisos. There is a provision, and then below there is a provided that, and then further provided that, like we had typically section 1023C, 15 provisos. That 15 proviso is also idiotic, but then we had provisos. Under the old act, we had 1200 provisos. Under the new bill, not one proviso. So what happens to the proviso? Same thing. Subsection, let's say there are a section has 3 subsections and 2 provisos. Now we have got 5 subsections. So 2 provisos become the subsections. What is the gain? I do not know. Is it simple? I do not know. What is it that you really got out of converting proviso into subsection, except by claiming there is no proviso now? Third thing that they have not said, they have not given the counting. In fact, that they have eliminated 900 explanations and 1200 proviso has been a matter of great quote-unquote achievement, because that is what they have highlighted more than once, that this is what we have done. I do not know whether it was really worth doing. Third thing, in a scheme of an act of this kind, you always have a provision, and below that, notwithstanding anything contained, there are certain exceptions. So, I counted, not physically by putting it on PDF and Control F. Under the old act, there were 252 notwithstanding. Under the new bill, again, no notwithstanding. So, but you need to have a provision, and then you will have another provision which will override that provision. You will have a third provision which will override both the provision. So what do? Notwithstanding is converted into irrespective of. So now, original section said so and so, notwithstanding above, this is the position. So new act reads so and so, irrespective of above, this is the position. Notwithstanding is now converted into irrespective. What is it that you have achieved? Except it makes, number one, difficult to read. We are always tuned to read notwithstanding as something which overrides an earlier provision. Now you say irrespective. And this is certainly a change. But it's not that every change is a good change or a welcome change or meaningful change. In English, there is a proverb that you cannot see the forest if you go on looking for the trees. નાની નાની બાબતો જોયા કરો તો આખું લેન્ડસ્કેપ ખ્યાલ નહીં આવે. So in the process of trying to amend every section, every provision, they, if I can use the word, mutilated, or they have changed the grammar, language, tenor of the old provision, but then it is stated, policy-wise, there is no change. So you are given the same food, but in different plate. I can't use the comparison of old wine in new bottle in Gujarat, so I'm not saying old wine and new bottle, but you are given the same dinner, but in a different plate. If this provision or this bill was meant to cater to a futuristic India, if we are talking about growth, if we are talking about development, if we are talking about becoming the largest, one of the largest economies of the world, should the income tax bill or income tax act not cater to such a situation and create avenues, create the provisions whereby really growth can be catered to? Let me give one more example again to begin with. Since times immemorial, we are aware of the concept of previous year and assessment year. Nobody gets confused by the concept of previous year and assessment year. But Honorable Finance Minister says it's a confusing provision. So we will now have previous year as a tax year, and assessment year as a financial year. So you change the name. How does confusion get eliminated? First of all, nobody is confused. Everybody knows previous year is the year of which income is to be assessed in the next assessment year. But now you will have to use, instead of previous year, tax year, and instead of assessment year, financial year. So this small changes across the board certainly has changed the scope of the bill textually, visually, but it has not changed the act significantly so as to regard it as a modern piece of legislation. This is not for the first time we have experienced. Those of you who have some exposure and might be otherwise you might have read it from the newspaper, we change Indian Penal Code, we change Criminal Procedure Code, we change Evidence Act, and the 3 new laws, which are even difficult to pronounce, in the sense difficult to remember, they are almost copy-paste from the old law. So why do you need a change unless you are going to make a change is the first issue that is troubling me. Be that as it may, we'll have to discuss the issues. So let's go to the, first of all, the length of it. Under the old Act, we had 819 sections. We have now 536 sections. Somebody has counted the words, how much cutting that we have done, like Darji. From 5,12,000 words, the new law has brought down the number of words by 2,60,000. I never believed that the number of words that you use in a legislation of this kind will decide as to whether it is good or bad. The law has to cater to multifarious situations. And if it is to cater to multifarious situation, obviously it has to take care of all problems. It has to be lengthy. It is lengthy. It's more than 600 pages. But then you have reduced the words to 2,60,000. And as the Honorable Finance Minister has said, there is no substantive change, there is no policy change. Now with this, let me now go to the scheme of the bill. I would not get into the specifics except a few provisions where I believe I could really feel that it requires discussion. For 2 reasons, as I said, I find throughout a statement there is no policy change. There may be changes here or there, some of them I have picked up for discussion, but in any case, if we need to discuss a bill of this magnitude, this is not the seminar that we can have. You'll have to have maybe 1 or 2 days seminar where chapters will have to be broken up and chapter-wise discussion has to take place. As I said, I'm only giving you overall view. Chapter 1, Old Act has 3 sections. Preliminary, name, etc. Section 2, definitions. Under the old Act, we had 42 definitions. Now we have got 112 definitions. Broadly, no change in the definition. Number of definitions have gone up. Section 3, definition of previous year, assessment year, as I said, has disappeared because now there is no concept of previous year and assessment year. We now go to Chapter 2. Old Act, Chapter 2 contained sections 4 to 9, the charging section, residence section, the scope of income section. Under the new bill, Chapter 3 has sections 4 to 10. Section 4 deals with charge. Section 5 deals with scope of income. Section 6 deals with residential status. And broadly, old provision is recapitulated in rest of the sections. There is one change now which is little important, which I need to discuss. In the next chapter, we have next chapter 3, old, sections 10 to 13. We are all aware section 10 deals with the list of incomes on which no tax is liable to be paid. Section 11, 12, 12A, 13, they deal with the computation and taxability of income of a charitable trust and institution. Section 13A deals with income of a political party. Now, under the new scheme, Chapter 3 has only two sections, 11 and 12. Section 11 deals with incomes which are exempt, like Section 10. But it is not a longish section because it says income of persons who are enumerated in the schedule in accordance with the schedule is exempt. So then you have to open schedule. You will have to open schedule 3. Schedule 2. Schedule 2 says there are certain incomes which are exempt for everyone. Some of the sections, 10 items are put in schedule 2 where income is totally exempt. Go to schedule 3 where income is exempt only for specified persons to a specified extent. Again, section 10 broken up into schedule 2, schedule 3. Schedule 4 deals with income of investment funds and business trust, again part of section 10. So section 10 broken up into third part and put on the fourth schedule. Schedule 5, income of investment trusts, business trusts. So it is again the fourth breakup of the section 10. Schedule 6 deals with institutional entities, finance services like gift city, etc. So their income now would be covered by section 10, read with schedule 6. Schedule 7 deals with there are certain persons who are exempt from any tax liability, total exempt, like some of the Prime Minister's Fund, etc., etc. They are put in schedule 7, read with section 10. So section 10 is broken up now into schedule 2 to schedule 7. In a way, I would not be opposed to that idea because what was happening today under section 10 was the exemption provisions were scattered in different sections or different clauses which were not logically placed. Let's say income of a charitable institution might come under subclause 2, subclause 7, subclause 20. In between, political party might come in between some other entity might come in between some financial entity might come in. What they have done is they have clubbed different entities on the basis of the kind of activities that they do or kind of benefit that they enjoy. So second schedule, third schedule, fourth schedule, fifth schedule, sixth schedule, they all deal with, in a way, like-minded or like-kinded assessees who are entitled to the exemption of income, exemption from tax wholly or in part. So that also schedule gives as to what extent income is taxable. One more feature of this bill is, this bill has 57 tables. Table means the earlier part of the section would say the transaction would be dealt with or income would be dealt with in the following manner. And the table would say serial number, kind of SSC, kind of exemption, conditions on which exemption is granted, rate of exemption, so on and so forth. So you find a table, you will have to look at the table where you are to be found. So instead of looking at the provision like an essay, here you will have to look at the provision which is like an arithmetical table read with the main provision. So whereas significantly there is no change, sorry I'm going on repeating, but that's the burden of the song, there is no policy change. So it is not as if there is any change in the kind of tax liability, scope of income, computation of income, or the rate at which tax is to be paid. The whole approach of reaching the destination remains the same. Whole approach of reaching the destination has undergone a significant change. The eighth schedule deals with political parties, and that's an end of the chapter. So where have sections 11, 12, 12AB, 13 gone? They are pushed back and they have gone elsewhere in the Act. I will go there as and when I come there, we'll discuss that. But then it's not as if exemption is taken away. exemption is continued, but then instead of putting them as a part of sections 10 to 13, under the old Act 11, 12, 13, 11, 12, 13, etc., they are now part of much later provisions under which sections 332 to 345, under which exemption is granted on certain condition. That takes me to the next chapter, chapter 4. Today we have chapter 4 dealing with, which is the major chapter. First of all, section 14 says heads of income. We have 5 heads of income. Those 5 heads of income, salary, house property, business, capital gain, income from other sources, remain as they are. Nothing is being changed. 14A, expenditure in relation to exempt income not to be allowed, is now being made as section 15, because there is no capital A, capital B. Slight digressing. Why do I say this is a problem? Because you have made the law keeping the present act in mind. By the time the bill is made into act, or maybe by the time next year comes or year thereafter comes, again, needs of time will require you to make amendment. So again, capital A, capital B, capital C is bound to come. It's not as if you are going to eliminate that possibility for all times to come, but today there is no capital A, capital B. So section, first of all, heads of income. After describing heads of income, sections 15 to 19 of the new bill deal with the income from salary. They have slightly simplified. What they have done is, section 15 says salary is taxable. Section 16 defines salary to include perquisite and profit in lieu of salary. Section 17 makes it taxable. Section 18 gives what is the income, what is the perquisite. Section 19 says what is income in lieu of perquisite. So instead of putting in a definition clause, today we have these items in a definition clause under section 17, they are now taken out of the definition clause and they are made into a new section. Now, there is a change. Whether it has really achieved some objective or not, time will tell. But this is what they have done. The definitions are made into full-fledged sections. So far as income from house property is concerned, sections 22 to 27, existing sections, become clauses 20 to 25, almost on the same lines, except it is clarified in the last finance bill that you will get the benefit of 2 houses, etc. Profits and gains of business, sections 28 to 44 DB, we have now clauses 26 to 64. It's like you have put everything in a mixer and started the mixer, and at the end of the day, everything is reshuffled. So the provisions are reshuffled, but then no policy change. So same thing continues. There are some minor issues which have really taken place here and there. For example, what is stated is that in relation to certain kind of income, deduction would not be allowed. For example, in relation to foreign taxes, whether or not foreign taxes which I have not got as and by way of set off under section 90 or 91 today, do I claim as a business expenditure is some debate which is going on. Now it is clarified, you will not get as a deduction at all. If you buy capital asset for cash exceeding rupees 10,000, you will not get cost of that asset as eligible for depreciation also, apart from section 40A, where you will get disallowance of business expenditure. Now even for capital asset, you will not be entitled to claim the expenditure as eligible for the purpose of depreciation. The written down value table is completely revamped, but at the end of the day, it is the same thing that they are saying. Section 57 is introduced for the purpose of recognition of revenue, where it is stated that for construction project, percentage of project completion method is mandatory, or for service project, if it is a service of less than 9 months, then you can take it on completion of project, otherwise you will have to spread it over on straight line method. And then section 66 of the bill contains large number of definitions under this particular chapter. But if I'm told, let's say if I'm asked that Mr. A is earning income of rupees 50 lakh on the basis of old law, how is his income to be computed under the new law? It will exactly be 50 lakh, not a rupee more, not a rupee less, not a single expenditure which was allowable is to be disallowed, or not a single income which was otherwise taxable is now being made exempt. With this, I now go to the next head of the chapter, capital gain, section 45 to 55A, which is now being placed as section 67 to 91, but the same issue, what is a capital asset, how do you compute capital gain, 45.4, all those sections are covered in different language. Because I am not going to go into each section, I am not going to get into greater detail except to say there is no qualitative or even quantitative change, it's only the figurative change in the language used by the draftsman. So far as income from other sources is concerned, today we have sections 56 to 59, which are now put as sections 92 to 95. And again, there is no change. I was looking into, in particular, whether section 56 to 10, which is the section by which gift received, etc., becomes taxable. Have they made any change? Over there also there is no change. And therefore, we are again left with the same set of law as compared to the earlier law. That takes me to the next chapter 5, section 60 to 65, clubbing. These same provisions are reiterated in the new chapter of clubbing of income as sections 96 to section 100. So again, there is no change over there. Chapter 6 today, 66 to 80, essentially 68, 69, 70, all those sections, we have a new chapter of aggregation of income, section 101 to 107. Firstly, section 68, 68A, B, all are retained. Obviously, they are given a new number. They are all to be taxed at 60%. And so far as they are given number sections 101 to 106. So, and that the provision that you cannot set off losses against this income, they will have to be offered for tax, absolutely, all those provisions continue. We have sections 70 to 80 dealing with carry forward of losses, set off of losses. Again, chapter Roman 7 under the new bill, sections 108 to 121 really make no change. 7, the provision of 8 years, depreciation to be allowed indefinitely. In case of a partnership firm and a partner retires, pro rata loss to be taken away. All those provisions are intact with no change, except the whole language has undergone a change. You will find extremely different language, but reaching the same conclusion. We have chapter 6A now. Chapter 6A deals with all exemptions, deductions, right from section 80A to 80VV, a chapter which I counted runs into more than 160 pages. Now that chapter is significantly crunched, reduced. How? Because now the new chapter essentially, which is sections 121 to 153, broadly says the same thing. But then all exemptions are now placed under Schedule 15. So Schedule 15 deals with as many as 20 plus different kind of exemptions. So what you need to do is, you need to go to section for the purpose of finding out what is the benefit and whether or not you are eligible and to what extent you are eligible. If you want to go, you need to go to the schedule to find out where do you fall if at all you fall in the table, because here also a table is used, where do you fall in the table, and whether if you fall in the table, you get the benefit at 30%, 15%, whatever. But then it is not as if like section 80 IAB or 80 IB or all those sections which capture the benefit. Now section does not capture the benefit. Section only says there is a benefit lying elsewhere. Where? The benefit is lying in Schedule 13. So you go to Schedule 15, go to Schedule 15 and locate it. Now, there are some exemptions under the current Act which are not repeated or continued under the old Act, under the new bill, like section 80 IB, 80 IA, 80 IAB, 80 IB, and 80 IBA, infrastructure project, housing project, etc. They are not now to be made available under the new bill. So what is being done is, there are SSCs, so benefit may be available for 5 years, 10 years, some years may be out, still pending. So sections are suggested or incorporated whereby an SSC who was otherwise eligible under the old Act for the benefit under, let's say, section 80 IAB, and his 4 years are still pending, he will continue to get the benefit under the old I-80 IAB, even under the new law. So sections 138 to 142 capture the situation whereby benefit of the old unexpired schemes may be available to the SSCs even under the new scheme. That takes me to chapter Roman 7, which is now new chapter 9 on rebates and saving. We have section 87 and 9 to 90. 87 is in relation to different kinds of income. 89 is in relation to salary received at one go. 90 is double taxation, so on and so forth. All those are now being captured under 155 to 158, again in the same manner. There is a policy statement which is obviously now a matter of law, that if there is a variation between the double taxation avoidance agreement treaty and the act would prevail over the treaty. If the treaty does not give a definition, I am not going to get into greater detail. There was some dispute as to if there is no definition of a term under the treaty and the domestic law creates that definition, would the old meaning of the treaty will continue or the new meaning under the act will continue? The Supreme Court has clarified that the meaning under the Act would prevail, that what was the explanation by the Supreme Court in the matter of Nestle is now being brought in over here. So this is again reiteration of the old principle. Now 90 and 91, that is double taxation avoidance agreement relief. There is a chapter for the purpose of avoiding GAR, General Anti-Avoidance Relief rules. So GAR chapter again is bodily lifted and put under the new law. The chapter of transfer pricing, section 92 to 92F, and which now includes specified domestic transaction, is also being repeated and replicated under the new law, sections 161 to 174, 175. Section 94, dividend stripping and bonus stripping, that is again captured almost in the same term, not the language. Language has completely undergone a change, but in the same term under section 175. So this is in relation to income, including exclusion and inclusion of income. The next chapter of determination of tax in certain cases, section 110, 115 BBJ, broadly MAT provisions to whomsoever it will apply will continue to apply. But if you are going for the new regime, section 115 BAA is captured as section 200. So 115 BAA continues. Section 115 BAB is captured as section 201. Section 115 BAC continues as section 202. If you are taking benefit of the these provisions, then MAT will not apply to you. Otherwise, MAT will apply to you. Now, if you look at the chapter of MAT today, it's a fairly complex chapter, book profit definition, carry forward, set off. Now, all that provision is crunched into one section with number of subsections. Those who are liable to pay tax under MAT will have to pay extra fees to all of you, because you will have to take extra effort to understand this. Because in the process of crunching different provisions into one section, the whole thing has become so cumbersome. I'll come back to this problem for another topic also, but it has become so cumbersome. On a first reading, and I did not have frankly time to do multiple readings because I had to look into the whole law. So in the first reading I found I could not make head or tail out of some of the provision except the statement of finance minister, but policy change there is none. Everything is the same. So on the premise that everything is the same, I believe that there may not be much of a problem. Income tax authorities, section 116 to 138, the position today, we have the new chapter 14, tax administration. So name is changed from income tax authorities to tax administration. Why? I do not know, because everything is the same. They have put section 240 as the taxpayers chart or rights. We also had the similar provision under the old act. There was a charter. I do not know to what extent it was really being implemented. Hopefully we'll have another better charter under section 240. But what I find is, at least in relation to section 132, search provision, parallel, now there is a definition of asset also. Right now, definition says money, bullion, jewelry, valuable article or thing. Now it says money, bullion, jewelry, valuable article or thing, both held in physical form and in virtual form. Second change that is suggested is they have a right to seize not only books of account and record, but also digital data, computer storage, backup data, tele-solution, Excel sheets, and all material available in electronic world. I come back to in a moment. Computer system includes storage data, all gadgets, remote server, cloud server, and virtual digital space. Which would mean that if an SS is searched, so far he was in law bound to give access to all books of account record material. Can he be compelled to give, let's say, password of his phone? Can he be compelled to share password of the cloud data application? This is a very, very complex legal issue. Maybe someday we'll take it up. Right of privacy versus right of the state to look into the private things. Some court, not in relation to income tax, but has taken a view, you can't compel a person to give his password. If revenue can independently find password, you may access it. But you can't compel an SSE to give the password so that you can open that particular system. I'm told, I do not know, that so far as Apple is concerned, for example, unless you give the password, it will be impossible to open or find out the password by anyone. Now, I'm not going there and get into this controversy. But in a given case, now that the horizons have expanded, the landscape has become bigger, and more often than not, at least those who indulge into having parallel record or who indulge into having unaccounted transactions maintain the record on virtual data, not physical data, but somewhere on the cloud. It's going to open up an interesting controversy as to whether an SSE can be compelled to share this data. I know what I'm discussing is theoretical because no SSE is able to withstand the pressure and say, I will not give the password. If you can withstand the pressure, Could you be compelled to do it? Could be an issue which may have to be tested in some court of law. But today, as the revenue proposes, they want to capture or have access to everything, including all such data which is lying somewhere in air in the virtual world. That takes me to the next chapter of procedure for assessment, section 139 to 158, which is being again put in under sections 262 to 301. Section numbers have changed. Broadly, it is the same. But what is it that they have done, which I must also acknowledge is a good thing? Today, for example, we have section 139, obligation to file return of income before section 140, capital A, permanent account number. Now, you can't expect a person to file permanent account number, file return of income unless he has permanent account number. So what they have now done is, and this is the improvement, PAN provision is before return of income provision. So section 262 deals with PAN, section 263 deals with assessment. So there is some such change. I'm not saying there is no change, but this is the kind of change, section here, section there. Section 263, which is parallel to section 139, deals with regular assessment, regular return, belated return, updated return. One positive thing that I could locate and I must share is, today as the law stands, that you are entitled to file revised return not before the end of 3 months before the end of the assessment year, meaning thereby 31st December of the assessment year, which is hardly a time, because in some cases the last date for filing return itself is December, even in some cases July, October. Now what they provide is that you can revise your return of income up to 9 months after the end of the assessment year, unless I have wrongly understood, but apparently this is what they are trying to say, unless now that I am speaking, I realize probably that tax year, assessment year, financial year confusion, I might be confused. 9 months may be the same year and therefore December. Subject to that, there is some change over here. Same issue of a processing return, scrutiny assessment, reassessments, notice for reopening. Two things over here. Before assessing officer will reopen the assessment, he will have to share information on the basis of which he wants to reopen your assessment. So GK and drive shaft is again being brought back expressly. He will share that information. You will have to give your explanation. Once you give your explanation, if he is not satisfied, he will reopen, otherwise he will drop the assessment. There are 3 exceptions to which I come to, but before that exception, unlike the current position where you have a right of reopening up to 3 years generally and up to 5 years if the possibility of income escaping assessment exceeds rupees 50 lakh, and for a block assessment 6 years, now they have aligned this with the block assessment. So again they have gone back to 4 years plus 3 months and 6 years plus 3 months. So the right to reopen up to 4 years and 3 months is almost absolute. Up to 6 years and 3 months is only if the possibility of income escaping assessment exceeds an amount of rupees 50 lakh. So there is increase in the time available to the revenue for reopening assessment by 1 year, both from 3 to 4 and second from 5 to 7. In 3 cases, they will not give you any show cause notice for reopening and invite your objection. The 3 cases being where it is found that reopening is based on interdepartmental information. The income tax department is entitled to seek information from Department of Corporate Affairs or Excise or Custom and so on and so forth. If they give information, then case can be reopened without even notice to you. If it is on the basis of finding of GAR approval board, if it is found that you are indulging into some activity, some arrangement, principal purpose of which is saving tax and not a commercial motive, it can be reopened. Or if reopening is being done in order to give effect to the finding of a court or a tribunal. Barring that, the notice is mandatory. Block assessment is the next part, sections 292 to 301, which is almost similar to what we have, except, again, as I stated, the virtual digital asset can also be subject matter of block assessment. That takes me to the next chapter, liability in special cases. Today we have sections 159 to 181, dealing with legal representatives, successors in title, EOP, BOI, trust, specific, discretionary, assessment in case of a company in winding up or otherwise, tax liability of a private company, 179. All those provisions remain what they are. But it is here in the chapter of liability in special cases, I find charitable trust provision is dumped. Sections 332 to 354 deal with the charitable trust. I must acknowledge I have not been able to understand it because I read it only once. It was so far very complex, and now looking at this provision, I find it was very simple earlier. It is now made far more complex. What they have done is, first of all, they have defined charitable purpose. It is the same definition. The 4 clauses originally, then the 5th clause was added, yoga, and so relief to poor, etc. The residuary clause, meaning any other object of general public utility, all that is maintained. But then in order to be eligible, you should be now constituted, registered, or incorporated in India. Now there are states where a charitable trust is not required to be registered. We don't have, like we have Bombay Public Trust Act, Maharashtra has it, but some of the states in South India, they don't have a Charitable Trust Act. So they would not be registered. They would not be incorporated because incorporation is only in relation to a separate legal entity like Section 8 company. Are they constituted? Because if they are not constituted, then they will lose the benefit for all times to come. Probably that is not apparently the desire. Then they have put in a Schedule 16. Under Schedule 16, lot of conditions are, first of all, lot of possible situations are envisaged for registration. 12AB, 12A. Lot of situations are envisaged for the purpose of losing exemption, Section 13. Lot of situations are envisaged in the matter of application of income, 11.5, etc. Lot of situations are envisaged as to how when you would or you would not be entitled to benefit, 85% being used, etc. So all things in relation to charitable trust are to be found only in one chapter, only in one schedule. That schedule, as I pointed out, is a schedule dedicated to charitable trust. But then it has table after table after table. And you must read each table to find out where do you fall, how do you fall, and whether you are standing or whether you are falling down, because everything is extremely complex. If this is simplicity, I do not know what is complexity. Now, the next chapter deals with, if I look at the Act, TDS and TCS provisions. Sections 190, 245, etc. They have been put down elsewhere because probably they want to take it as a part of recovery mechanism. So first they have put in chapter 18 dealing with appeal, revision, and alternate dispute resolution. Appeal, CIT appeal, same thing, IT8 is same thing, High Court same thing, Supreme Court same thing. But I do not know whether one should be happy, one should laugh, one should cry. It is reiterated, it is expected CIT appeal should dispose of the matter within 1 year. We have 5.5 lakh pendency. Matters are not being disposed of for years together, and Honorable Finance Minister, the bill says they should be disposed of in 1 year. And tribunal should dispose of the matter within 4 years. Today the position is that because CIT appeals are not disposing of the matters, most of the tribunals are able to dispose of the matter within 4 months. You file appeal. There are stations where you file appeal and the registration clerk will say, take the notice of hearing with you. We'll fix the hearing here and now after 60 days because notice will have to be given to the department. So that 4-year period has become 4 months for the tribunal, and 1-year period of the CIT appeal, that wishful thinking, we do not know when that will be resolved, with more than 5.5 lakh appeals pending across the country. I really shudder of thinking of a day when CIT appeals start disposing of the appeals. Tribunals will be flooded, and thereupon high courts will be flooded suddenly with so many matters. I wonder why CIT appeals are not under the administrative control of the board and why board is not taking any action. Maybe they are waiting for VSVS to be over, but VSVS has come only recently. For almost 3 years, no appeals are being disposed of. But then the language of the provisions have remained the same. CIT appeals within 1 year, tribunal within a period of 4 years. Then comes the next chapter of collection and recovery, and it is here the TDS provision is also dumped. Now, TDS provisions today are 42 in number. Those 42 provisions are magically made into one section. How? One section says, hereafter TDS will be in the following manner. Table. The section, the act, rate at which the TDS is to be effected. So you look at the table and get the solution to the problem. So all 42 sections are merged into one section. Similarly, TCS provisions, which are 4 in number, they are put into as one section, section 394. Advanced tax, same mechanism, 207 to 219 are now made 403 to 440. SSA in default and recovery, same mechanism. Tax clearance certificate, same mechanism. Interest also same mechanism. I'm not troubling you. Next chapter of refund, 237 to 245 becomes 431 to 438. Penalties, sections 270 to 275 now become 439 to 472. I just wanted to check up one penalty, section 270 capital A, because that's the penalty with which all of us are concerned almost day in and day out. Concealment of income and furnishing of inaccurate particular under 271(1)(c) or under the new provision under reporting and misreporting. That under reporting and misreporting of section 270 capital A is captured under section 439, almost verbatim same. So again, no change. So also there is no change in rest of the penalty provisions. Prosecutions, section 275A to 280D, same provisions are continued under section 473 to 498. Miscellaneous provisions, last chapter 281 to 298, we have the same 495 to 536, except one section is introduced, registration of valuer. This would cover the broad overview of the bill. So what is it, at the end of the day, what is it that we have learned? What we have found is, yes, there are changes language-wise, grammatically. It is said, if I go by the Honorable Finance Minister's proposal, she wanted to make it concise, lucid, easy to read and understand. If you call a piece of legislation of 622 pages concise, I have no problem. But let me assume that you need to have a piece of legislation of this size to cater to the problems. Maybe you made it concise as compared to earlier law. Lucid, partly yes, partly no. If you break a long sentence into 4 small sentences, maybe it becomes lucid. But easy to read and understand. Easy to read, yes. Easy to understand, I am not very sure. Some of the provisions are made far more complex. Today, if somebody were to tell me that he can answer problems in relation to charitable trust off the cuff, I will salute him. Because to my mind, the whole chapter has become so complicated, it's extremely difficult for anyone to give an answer on anything on the spot unless he reopens the act. That provision is, for example, made far more complex. Similarly for MAT. So it's not as if the sections are, or the provisions are being made simpler. In any case, as is being stated, policy change there is none. Direction change there is none. There is no change in the law as it stands today. Then, sir, what is it that we have achieved? If you were to, in the name, while amending or while changing the law, you were also going to address the future, probably it would have served the purpose. Yes, there is a structure overall. I have no dispute there, but to what extent it benefits? Yes, there is to some extent simplification of language. It is stated obsolete provisions are eliminated. In any case, obsolete provisions, you don't need to have them. If you tell tomorrow taxman that you publish taxman book, not printing all those sections which are not on statute book anymore, surely the Income Tax Act will be far more concise. So that in any case does not really help us. Rationalization, that is what is the next claim. It is rationalized. How it is rationalized, I have really no idea. At the same time, I just discussed digital access, privacy concerns are being raised. If there is a desire that by this process you will ensure that there is reduction in tax litigation, I see no way this is going to continue. This is going to happen. Litigation will continue because there is no serious attempt made to address the problems on a holistic manner. So, let me conclude by saying this. Yes, there is a fundamental redrafting change in the matter of drafting of the law. But why would I say there is otherwise a fundamental change? Because even the Honorable Finance Minister claims that policy has remained the same. So we are, let me close with the same, in spite of being in Gujarat, old wine in the new bottle. And with that bottle itself may be of a plastic bottle of which I am not very sure what is the utility. Thank you very much.
Respected members, the sir has gracefully agreed to answer few of the queries if any members have, maybe on the new act, on old act, general queries as well. Yes, Sailesh bhai.
Anybody who has actually read the law and has relevant questions.
That's why I precisely mentioned even in the old act as well. Sailesh, I requesting members to kindly be seated unless and until a formal vote of thanks is proposed. This is a small gratitude which we can offer to Soparkar sir. So unless a vote of thanks is proposed, I am requesting all the members to kindly be seated.
We will take 2-3 questions.
Hello. Sir, you said that the whole concept behind that the law has been redrafted just because of a simplicity, lucid, concise, and easy to read and understand. They have mentioned this in their FAQs, and you also said that. So generally, normal people or CA would like to know after these doing simplicity, the litigation will come down or it remain the same? Because sometimes we have to mention, sometimes we have to say to some people, not a simple language. We have to say that you have to go in this other way.
Good question. Let me answer this. Let me for a moment assume that the law today is complex. Let me proceed with that particular premise. Number one, but not that every provision is complex. Let's say 20% of the provisions are complex, 80% are simple. Even out of those 20%, large number of them over a period of time because of litigations and answers or adjudication by tribunals and courts would have settled. Which means today it's possible for me, if somebody comes to me and consults me on a provision, how would this provision apply or affect me? I may be in a position to, or all of you may be able to give some answer on the basis of explanation of that provision by court or the tribunal. Now, that benefit is lost. What you have is a new law, maybe the same thing but expressed in a different language. Maybe its meaning is the same and the old law will continue to apply. But maybe it's equally likely if the old law is in our favor, department may say that now that there is a change in the language, the old law will not apply. Which would mean that you again start fresh set of litigation on concluded issues. See the problem, and that is why it is advised by and large, don't change the whole law. Change whatever you believe is hurts you or is something which you do not want. Suppose tomorrow they feel that the chapter of charitable trust is not good, change the whole chapter, no problem. But why do you need to change the chapter of salary or income from house property? The moment you change the whole law, all rules of the game which were set so far by itself will disappear. You will have to then match color with color. You will have to look at old law, look at the new law, to what extent they are same, to what extent they are different, to what extent or how they were interpreted earlier by the court, whether earlier interpretation would continue to hold good, if yes, why, if no, why. Whole exercise will start again. And because it is a fresh exercise, it's a free day for everyone, free for all. SSs will argue, old judgments against me will not apply. Revenue will say, old judgments against us will not apply. So what is stable becomes completely unstable. And that is where I believe that unless you want to change the whole spectrum of law, don't make such changes. It is really not going to benefit economy, revenue or SSC. Litigation will start afresh with the same settled issues.
Thank you, sir.
Sir, in this CA community gathering, can you please guide us what are the changes applicable to a CA, like tax audit changes, or what is this affects a CA practicing CA?
Nothing, no change.
No change.
Tax audit limit, financial ceilings, no change. For professional, presumptive taxation limit 60 lakh, 75 lakh, no change.
Do we have any other questions? Mayur?
Sir, is there any changes in CBDT powers with regard to they do not have to take this to in Sansad or something powers change? I have read that CBDT powers has been changed. By that way, they have incorporated such things without interaction with certain authorities.
Frankly, I have not seen from that perspective, but there are certain provisions where the power is delegated to CBDT, where CBDT can exercise the power on its own. Or sometimes they have to frame rules which have to be put on the floor of Parliament. So there might be some such change. But have you ever come across a situation where government has proposed an amendment and it is not passed? So whether CBDT keeps the power or not, CBDT is what? Finance Ministry. And Finance Ministry, whatever law it ever suggests, it has always been passed. So I am not worried about CBDT having or not having power. They always have almighty power.
Actually, I asked this question like GST, we have to face the same thing, monthly meeting like that or not?
There is a GST Council.
Okay.
Because under the Constitution of India, okay, let me give you 1 minute perspective. GST is being shared between the state and the union. And therefore, all states and union are interested in finding out a mechanism for the purpose of A, tax collection and sharing. So for that purpose, there is to be, under the Constitution of India, GST Council, which will have to take policy decision, so that states are appropriately given their share out of the tax revenue. Now, so far as income tax is concerned, it is not as if Finance Commission will decide of the total collection what would be given to the state, but that is not a function of the Income Tax Act. Whereas in case of GST, it's a function of the GST Council under the Constitution of India. And that is why the powers are, in that sense, slightly different.
Thank you, sir.
Good evening, all. I like the fact that every time I come here with a notion and those notions are changed. Not only changed, they are shattered, and new notions we carry, and that's the beauty of sir. And that's why we come here to listen to you, sir. All things happen for a reason. We had this old, very less amendments were there, and since we had cancelled that lecture, and now we are at this new ICI premises. So it's a double privilege actually to extend a vote of thanks on behalf of all of us here and a lot many who are listening on YouTube as well as from the podium of our new ICI, which we all are very proud of. Firstly, sir, thank you to our esteemed speaker, Saurabh sir. From being students to newbie CA, to ACA, to FCA, to senior chartered accountants, we've been listening to him since so many years, and it's always a privilege to listen to him. It's a pride for us as well, sir, to listen to you. We all know that income tax laws can be a bit like that relative who visits only once a year. Not always the most exciting, but here to stay and very important to pay attention to. However, with your deep understanding, sir, you have made a relatively complex issue much more digestible. A big thank you once again for your valuable time, effort, and expertise. A huge round of applause for this, sir. Thank you all here, hoping the only tax we feel is the one, our knowledge. Thank you.